Hey, welcome back to another episode. This is JR, founder and CEO of Social Market, and this is my partner, Leon Hitchens, CMO of Social Market, and this is Social Ledger Report.
We've got some cool stories this week, and there's still a ton of stuff happening in crypto. I don't think it'll stop, but
Yeah.
good and bad for us.
Yeah, well, this is why we're here to help you understand what's been happening with the state of the markets and with crypto on a weekly basis. We're changing things up a little this week, so for the first time, we're going to try to release a video Monday instead of our Friday schedule because we're still trying to figure things out, make sure what we're producing for you is to your liking. So if you have any suggestions, things that you'd like to see, please let us know in the comments. And before we continue with this video, please subscribe to our channel if you find it of any interest. If you want to stay up to date on the weekly news that are happening in the markets, subscribe to the channel for that. But with that said, I actually want to demo what Social Market is. I think it's a good time right now to demo the app or to show you kind of what we're doing. State of the market for the last week is as follows. It's pretty much Bitcoin season instead of altcoin season, meaning, a lot more people are buying Bitcoin or use it more. Fear and greed index is about 60%, so it's about greed. How's Bitcoin? Bitcoin for the last week has been going up and down. I know earlier this week there was that whole conflict with Israel and Iran. I'm not an expert, so I can make comments beyond that, but it did affect the markets. So it was reaching about 110, 112, and now it went down to closer to 100, and then now it's back at 105,000. So Bitcoin is jumping up and down. So that's as far as this.
Holding above 100. I think that's the key part. 105 is pretty good considering it's been holding steady above 103 roughly for the most part.
Yeah, absolutely. So, I think earlier this year, everyone was concerned that Bitcoin wasn't going to go back to 100,000 again because of the state of the economy and price of eggs and everything, whatever concern it was back then. But it's remained strong. It's remaining still at over 100. So I think this is strong for everyone, strong for the space. So overall, it's pretty exciting to be here. But that's pretty much as far as it goes for the markets. On to our first story. We're going to be talking about the state of the crypto regulation, HR 1747, Blockchain Regulatory Certainty Act, and the Clarity Act that has made significant progress in the Senate floor, or I think in Congress. So we're going to talk more about that here in a moment. And then next, we're going to talk about Polymarket joining X as both brands partner so they can leverage each other's data sets and database and code base to enhance their overall products. So they partnered, and that's kind of big. Everyone was talking about it on Twitter. I still call it Twitter, at least.
I think we all do.
Right. So, and in our last story, we will talk about the State of Crypto Summit by Coinbase. A lot of interesting stuff happened there, and I actually put together a couple of things that I want to talk about with how credit cards are starting to adopt Bitcoin. We've seen this with the Gemini credit card, but now we're going to see that to some level with the new Coinbase card, which we'll talk about more here in a moment. The House introduced digital asset market structure legislation building on discussion draft. So what this means, and we'll leave a link to this article below, on May 5th, 2025, several House committees jointly introduced a discussion draft for a bill that would establish regulatory framework for digital assets on May 29th. House Financial Service Committee Chairman French Hill, Republican for Arkansas, introduced an updated version of this bill named the Digital Asset Market Clarity Act, or Clarity Act. So, I'm not going to go through everything here. You can look at it again on your own. But what all of this talks about is why it's important to have this bill. As some of you who have been in the crypto space long enough, you will see that some businesses were being classified as money transmitters or some sort of bank by the previous administration with the SEC and Gary Gensler. So this is kind of what the Clarity Act is trying to do, actually interpret the law, because with the SEC before, they were saying they were breaking the law, even though there was no law to be broken. There was no certainty or clarity to how this law was. So this is kind of like the story. Again, so this bill was first introduced on May 29th.
I think the big part too of this is like the key part of it is its infrastructure that it's protecting. So
Yes.
before you had software developers, you had node operators, validators, miners, any like the multi-sig service providers were being classified as money transmitters. So it's really protecting the infrastructure layer that there's people building on it. So it helps this scale legally and gives everybody like some clarity on what's happening. You know, even with social market, like that was one of the conversations you had early on. Is I think with a lawyer that you needed to get very specific licensing because you could be considered a financial middleman in the end, and it's helping so much give a stable environment for Web3 founders. It's promoting like good actors, and then it's giving the United States a place to regain global leadership in building Web3 products. Because for the most part, I feel like China's banned Bitcoin, crypto left and right, back and forth, but like most people that were building Web3 products were Southeast Asia. I saw some Europe.
Yep.
Like there was some people in the United States, but the United States had a big gaping question of just regulatory frameworks.
Yeah, actually, Japan. Now that you mentioned Asia or Southeast Asia, Japan is actually one of the early. One of the early Asian countries that adopted Bitcoin and crypto regulation. Like they were charging less taxes than any other countries as far as capital gains taxes. So yeah, I mean, to your point. Yeah, so going back to the story real quick here. So even though this bill was introduced in May 29th, it was actually making progress just early this week. So Senate Majority Leader John Thune, I think I pronounced his name right, John Thune, he was the one who was making progress. This is from Tom Emmer, but this is him back in May 21st talking about the bill. But then at a later time, he quotes his tweet earlier this week saying, "If you do not custody consumer funds, you aren't a money transmitter, plain and simple. Our nonpartisan Blockchain Regulatory Certainty Act, which codifies this simple concept, has been added to the Clarity Act." And he thanks Representative French Hill, Brian Stale, Ritchie for their support. So they're all part of the same committee who kind of came together, saying, hey, this has actually been making progress here in the Senate. So Brian Armstrong later came out this week saying, thank you to Leader John Thune for moving the Genius Act to the Senate for getting closer. So this is him. This is Brian Armstrong responding to Kara Clovert, or retweeting it, saying, where her original post said, hey, I'm grateful to the senators on both sides of the aisle who have burned the midnight oil for weeks to find a bipartisan path forward on the Genius Act. Huge thanks to Leader John Thune for bringing the finish line within reach. So at the end of the day, I think a lot of this progress was made because of the John Thune, the majority leader for the Republican side. So it's always great to see. There's a word for it. Bipartisan.
Yeah. There we go. There's a bipartisan
exactly.
support for the bill. And then also when you get industry leaders like Brian Armstrong, like rarely do you have industry leaders and lawmakers aligned. It's a big signal to kind of get this over the hump and actually into law.
Brian Armstrong is a very passionate founder. He's from YC. For those of you who may or may not know. So I think when you have founders who come from such a, I want to say, prestigious accelerator, and they have that kind of caliber, they're very particular about the kind of people that get into that accelerator. This is kind of like what you get. You get leaders who are very high caliber, representing people. I think that's where a lot of major progress can be made, because right now, crypto is updating the financial system as we know it, which is part of the reason why we're building a startup on crypto. We believe in that mission, and I think Brian has been doing an incredible job at passing that message for everyone, and I believe has helped a lot to transform the crypto or the industry to be more adopted, be more trusted because of people like Brian Armstrong. To your point, Leon.
Yeah, and like you need a face to a movement. Like you need somebody to go to Congress to represent. You need somebody to advocate on the internet. And two parts here is Twitter. Between everything, Twitter is a really big sign of like things still happen on this platform, even though everyone says that it's kind of died. But Brian Armstrong pushing it along. I think he worked at IBM. I forget where else he worked. And
He
then
worked at
that
Airbnb
YC
at one point.
Okay, yes, Airbnb as a engineer, and then he used that YC money to found Coinbase. Like, huge investment for YC, and seeing it, in the future. Like, massive player on their part.
Yeah, so he actually worked in IBM, like you said, and Deloitte. Deloitte is a pretty big software consulting company.
Yeah.
So pretty big companies that he worked in. So, but yeah, I think this is pretty much as far as we have to cover for this story. We'll keep you guys updated next week if any changes happen with Senate floor as far as the Genius Act or the Crypto Clarity Act.
Yeah, you might
Stay up
see
to date
it
with
as
that.
HR 17472. So, a few
Yeah.
names to this one. It's a little confusing.
Yeah, every bill almost starts with an HR, I believe, in some 4 digits. So we'll keep you guys up to date with it. Okay, so on to our next story. We will talk about Polymarket joining with X or Twitter, whatever you call it. They both are, well, Polymarket came out this week saying they are leveraging Twitter's Grok to do market analysis on their platform. This is a post from XAI, and it says XAI partners with Polymarket to blend market predictions with X data and Grok's analysis. Hardcore truth engine, see what shapes the world. This is just the state of our partnership with Polymarket, more to come. Sometimes I feel like the way this tweet was made it came from someone who talks like Elon. I see some of their text, some of their phrases kind of be the same, so I don't know if it's just Elon who uses the X
Maybe they fed
account or
into
something.
Grok and was like, hey, write this like Elon would write it.
Yeah, that's also a very possibility. So this is actually a great post because it kind of does a demo on how the platform would do, or what this new partnership manifests in the Polymarket platform. So if you have not used Polymarket before, just a very brief TLDR. Polymarket, it's an actual on-chain or on the blockchain prediction website where you can make money by trading shares for yes or no predictions. So if you can buy a yes for a quote, you're actually buying a position, and when that position resolves, you actually cash out or you lose money if you lose. So it actually tells you how much money you would win if you bet X amount of money. I think it's a very clean, very intuitive platform, especially it being on the blockchain, so you can always verify in real time what happens. Kind of like being able to verify transactions on the blockchain with Bitcoin, for instance. So in any case,
and it's still not available in the United States, right? Like, it's just you have to VPN to do it, because that's the interesting part for me, is that AIX is objectively an American market thing, but the Polymarket's still not available in the United States because of gambling regulations or crypto regulations. I'm unclear on why it's not available here.
Yeah, so very quick TLDR. So by the way, Polymarket is backed by Peter Thiel. So Polymarket's pretty big in that sense too.
Okay.
Yeah, so Peter Thiel backed Polymarket. I don't know what that deal looked like, how much money he got, but in 2021, I believe, they actually had to pay a fine to the SEC for like somewhere in the realm of $1.15 million or something. Because what they were doing was not to the standard of the previous SEC administration. So, I mean, big surprise. So as a result, they don't allow people to use Polymarket in the US, but people still use it with a VPN. So, I mean, that's just the data. And you can find this kind of data on the internet. So, you can always verify that. But in any case, if you look at the video here, I'm not going to play any audio, but I'm going to mute the audio on my end. But this is generally how the platform looks like. Here you can see the timeline, and you can actually see a Twitter feed, and you can use Grok in the platform to do like an analysis on the situation. So I haven't used Polymarket yet, like today or with this update, so I can't tell you how it is from firsthand. But based on this demo, I don't know if it's something that is going to be rolling out soon, if it already hasn't. But I think it's amazing. Like, I've used Polymarket before, and it's very clean, it's a very clean experience. It tells you what you're getting yourself into, and I like that. I think this is going to improve user experience and just the overall amount of traction for the platform. people are
Yeah,
gonna.
it's like Bloomberg Terminal meets ChatGPT meets Vegas. Like it's open, it's
It's a good point.
decentralized. The part that I find really interesting, it's using data from Twitter, which is with all of Twitter's problems, all of X's problems, it's still the watering hole for news and information. Like even as people flocked away, more and more people are coming back to it because it does provide it. It's like, you know, could you imagine, you know, like as the Trump, like will Trump win the elections? Like if it had this market data and it could kind of say, hey, what's happening, and you know adjust that, give people all this data. Like, you know, Robinhood. I think if you pay for Robinhood Gold, you get Morningstar data.
I pay Robinhood Gold, and yeah, I think you do. You just need to
Yeah.
configure it somewhere in the app.
Yeah, so you get like data there. Like for prediction markets right now, there's been nothing. So having a prediction market that's on chain that also has not just a static source of data, you can kind of go and read all the sentiment that's happening. Now, I think the one problem that you're going to have is Twitter is leaning much more like conservative in recent years. So
Oh, yeah.
could it dilute the data and you kind of like get the wrong thing? Now, the right now Twitter has not been wrong as a place. It, you know, kind of predicted Trump. It kind of predicted a bunch of stuff happening. So it seems to be right now the right source of data, but you know at some point it could be the wrong source when things kind of flip the other way.
I agree. So I think now that you mentioned predicting Trump's victory, I think that's what you said, right? Like
Yeah.
Twitter being able to predict it. It actually also was in par with Polymarket because you would look at, if you guys remember the state of the elections in November this last year, you would see on traditional media saying that Kamala was actually the prospective winner. They had all this data, they had all these charts and percentage numbers saying that she was actually going to win by a landslide. But
Yeah.
you look at Polymarket and it's actually just not only in Polymarket, but you would see the kind of feed and FUD or just coverage on Twitter, and it was a lot more leaning towards Trump. Even Polymarket made it so Trump would win at a very close margin that was similar to the actual outcome of the elections. So Polymarket, its reputation increased tenfold since then, and I actually have some numbers for you guys today. So this is Shane Copeland. He's the founder and CEO of Polymarket, and this is a post he made back in December 3rd, 2024, saying Polymarket not so niche anymore. And this is similar web, saying, or kind of just highlighting some of the visitors over the last 28 days from as of November 22nd of 2024. They had almost 50 million visitors, which I know you and I were talking about similar web previously at some point, saying how not knowing how they get their data exactly.
Yeah, like I think a lot of their data is kind of like how Alexa used to do it before Alexa was an Amazon product. You know, they use aggregate like upstream providers, level 3, AT&T, stuff like that. But I did do a search, and we've talked about this a little bit before, is like
Yep.
Polymarket in size comparative to a Robinhood, Coinbase, like you know, even a DraftKings, Kalshi, all of them. It's like relatively small. Like Robinhood, you know, does 14.9, so practically 15 million monthly active users. DraftKings has about 4.8 million active users, whereas Polymarket reports about 314,000 active monthly users. They're the only platform that actually provides daily active users, and this is, I think, an interesting metric. Is there's 55,000 active daily users, which really signals a high usage of the platform. You know, for 314,000, that's, you know, monthly active, and then you have 55,000. You've got a really big early adopter kind of bundle. But then when you look at total registered users, and this is like, you know, these are all estimates, I'm sure, based on like earnings and everything. But Robin has 25.2 million funded accounts. DraftKings has 10.1 million active bettors, and Polymarket has 4.1 registered wallets. So
4.1
there's
million. Wow.
there's a big difference between 25.2 to the Robinhood's 15 million active users. Like small margin there. You know, DraftKings 10 million active bettors, only 5 million of them roughly active every month. But you know, 1 million wallets to only 314,000, active users, it just, kind of shows like there's probably a portion of that, people out there that sign up just don't really use it, and then there's a really big tech adopter. I think if Polymarket could get regulatory approval in the United States again, they could be massive, but also everyone Sherlocked them. Robinhood has a predictions market. I think it's run by Kalshi too.
Robinhood. Yeah, actually, they did roll it out around the same time of the elections because I think it was Polymarket and then Kalshi, the ones that were, Polymarket was mostly just promoting it on Twitter, and then outside, like on fucking Fox News, anything that you would watch, it was Kalshi. So, and then Robinhood came out.
And they're using Kalshi, right?
Yeah. So most people here in the U.S. use either Kalshi or Robinhood. I had some friends who were making bets on the elections with Robinhood, actually. So it was like dollar bets or something. But yeah.
Yeah. But it just, like, even though Polymarket is a large draw, I think most people are using it for the, like, market prediction to kind of go see sentiment out there versus, like, actually betting. And I think that's going to be their hardest part in the end is, like, they're like Reddit. Reddit was the front page of the internet, but most Reddit people weren't actually Redditing. There was a small portion of people that actually did, and then everybody else just kind of came in and was like, oh yeah, I'm just going to read it, use it as information. It's great. Polymarket having all their stuff publicly accessible, I think, is their draw, because it is pretty good market data of sentiments, what's happening. But how do you get more people active? How do you grow that? Because even though they're the biggest on the list, they're relatively small comparative to Coinbase and Robinhood, DraftKings and Kalshi's and everything. I'm kind of surprised The Economist popped up on there. And then I've never visited Real Clear Politics at all.
Me neither. I hardly even know any of these. Like Predicted, The Economist, Betfair, I've never heard of them. Or I have heard of The Economist, but like Real Clear Politics, I haven't. I'm surprised. I think Polymarket is the first and only on-chain prediction marketplace right now, as far as we know. So maybe someone else is building a Polymarket competitor. I don't know. But so this is the data as of December 3rd, 2024. So he actually, Shane came out early this week actually doing a comparison. So, this is from June 13th. It's surreal just how big Polymarket has gotten. And even on May, as of, not a very trendy month May has been. It looks like they have about 15.9 million visits, and Robinhood having 37.1 and Coinbase 34.7. So Polymarket is number 3 in this chart. And then number 4 is DraftKings, and then FanDuel, Betfair, Kraken, and so on. So crypto seems to be kind of trending. I wonder what the prompt or what kind of list he curated. I don't know if it's like as far as crypto-based websites that had this kind of visits or what. I'm seeing Kalshi predicted.
Lump them into any sort of, I don't know. That's really interesting. Yeah, like I wonder what SimilarWeb is grouping these together, because they don't really group unless you just put them together on a list. Because like Pump Fun, 5.5 million. It's kind of small. Like I would have thought it was bigger. Also, Kraken, going public and only being at 7.4 million. Like that's, they're small. Granted they're European initially, but small for that. Like, man, even Kalshi, like being 1.4, like. Some of these have apps and stuff. Like, is this aggregating Coinbase's traffic for the app? Does it have all that? It brings a lot of questions into there. Like, I'm not doubting that, again, Polymarket is a destination for people to view. I just don't know if usage is representing visits. Like, I think there's a lot of people that go, oh, hey, let's check Polymarket, see what that is. Because it's easier than being like, hey, do you have Robinhood or this and that? You can just go to Polymarket, unsigned in, look at what's happening and see what bets that people are making, and then you dip. Whereas Robinhood, you sign up, you're like in the app, your registered account to actually have to see all of that.
Yeah, I actually like how Polymarket has, if you go into their website, you can actually view like any trend, any predictions that are trending. You go into one of them, you can actually see like a social feed where people are talking about it. They're just anonymous accounts because you don't need to put your actual information there, like your name and stuff. You can just create an account, start leaving comments. A lot of people use actually Twitter interchangeably by leaving like links, or they use some news outlet like New York Times, Washington Post, you name it, as far as leaving relevant content or real time news that is happening according to whatever prediction. So it's really fascinating. Shane Copeland is trying to position this as a new kind of media where it is a neo kind of media. You know, people are no longer using traditional media like Fox News, CNN, NBC, you name it. They're now going online on certain things, like I guess in this case Polymarket, to see what's actually trending, what are people's views. People oftentimes put their money where their mouths are, so I think that's a powerful tool.
Yeah. I think that's really right. Like, you can kind of see what's happening out there. I don't love this rise of like gambling and betting that's normalized. I think there's a portion to it that's a very dangerous game that we're playing with markets and just like world politics and social contracts that we've always done. Like, if you can bet on it, only a small portion of people that actually bet in the world really end up making money.
Yeah.
So, like, the sports betting I find worse than the market betting, but
Yep.
it is a really interesting thing because Polymarket was right about elections. They were right about a lot of stuff, and they people's sentiment, and also as you get closer, people's sentiment like they all consolidate to one area. So as people start to talk about it, like, it's huge. Like, if they can use the data from X to actually feed the prediction market and like not only put it in there, but put a like a marker of like, hey, what does X think? Like, is X leaning towards this is right or is this wrong? That would be really interesting to see because, again, so far Polymarket has been relatively right in a lot of stuff. And then there has been some like high profile cases where it was just like totally wrong.
Yeah, I predict, my theory is that a lot of inside traders also use Polymarket, so that actually gives us sometimes a glance at what actually is happening in the inside. So, we've seen that happen. Polymarket even uses it as some of their ads, where some guy just joined their account, made a $1 million bet, and then they walked out with $2 million or something. So they knew something, because nobody just goes in there and leaves a big bet like that, expecting to come out with come out on the other side of the tunnel with a big return. So that was very much intentional. So I think it's really interesting we get to see that at first hand. But yeah, I'm not surprised that now Twitter and Polymarket are coming together in a partnership.
Yeah, I'm excited to see it.
Yeah, we'll see what happens in the future. We'll cover here at Social Ledger Report. But with that said, though, our last story for today, we're going to be talking about the State of Crypto Summit with Coinbase. So this happened earlier this week. Q2 2025 State of Crypto Report just dropped. TLDR, the world loves stablecoins. This has been from Coinbase on Twitter. We'll leave the link as well. Most links will be on the description as far as relevance to what we're covering today. So we'll leave this post because there actually covers... It's a thread talking about, they leave a link talking about more on what actually happened at the State of Crypto. You can also see some of the comments for relevance to how people are reacting. I like how in their story here for the thread, they talked about, or they showcase 161 million stablecoin holders. Like, a lot of people individually are holding stablecoins, which is more than which is more than the 10 largest cities in the world combined. That's kind of amazing.
That's crazy. Yeah, and then the other things that they really mentioned, stablecoins is a big thing. It's like it's stablecoins, and I finally understand it after we went to consensus because I didn't quite understand it then. It's stablecoin payments are going to become invisible. They're going to be embedded platforms that everyone trusts. It's going to be the infrastructure and the technology upgrade for the financial system that's largely been built in the 50s.
Yeah.
Stripe is looking at stable coins. Coinbase has their base stuff. It's an L2. It offers instant settlements, fees near zero. Shopify now accepts stable coins in their options now, which is huge. They're the biggest e-commerce platform on the internet right now. I think they take up 3-4% of all e-commerce or all internet traffic. I'm not sure what percentage of e-commerce they take, but it's going to be a huge shift because I'm going to be able to instantly transfer money to you, and really it's going to be a stable coin that probably does the instant transfer. We won't notice that it's anything different than regular money at some point, but it's going to be a huge thing. There's also the fact that you've got the Financial Innovation Technology Act, all that stuff passing. You've got regulatory clarity. More companies are jumping into Bitcoin. And then the other cool facts here is that Coinbase did a lot of polling. 3 in 5 Americans believe the current financial system is outdated. No duh, you can't transfer money to somebody without using Zelle or Venmo or PayPal. That it's dumb. 51 million Americans own crypto, and to kind of frame that, I believe there's 320 million Americans, 150 are adults that are able to work.
Yeah.
Pay taxes, all that. So a third of Americans that are working, that are adults, own crypto. And then it's not a political ideological line. Democrats and Republican voters agree we need more financial innovation.
We do.
So it's not a partisan issue. It's a generational one. The stats skew way younger when you look at it. But again, this is just huge thing. You see convergence on AI and on-chain data. We just talked about it. AIX and Polymarket. NFTs are becoming a thing. Their identity, their credentials, their access. You buy a car, your title is a NFT that's unique to you. And then prediction markets are integrated into financial forecasting. It's crypto isn't a sidecar. It's part of the engine, just like AI is a feature on there. And then what was the stat? There was a stat that 54% of all Fortune 500 companies are adding crypto into their stack or something, right?
Yeah. So if you follow this, we'll leave this link again. There's a link in the thread here that covers the full story in Coinbase website, and it's called "The State of Crypto: The Future of Money is Here." And what I like about Coinbase, they're actually really good at kind of portraying and interpreting data, for context. So in Coinbase, in consensus, we covered how Coinbase actually got adopted into the S&P 500. So my theory is this is actually impacting a little bit, maybe influencing some of the other Fortune 500 companies with blockchain adoption. But to your point, Leon, so you were asking earlier, how does that data chart metric look like for Fortune 500 companies?
Yeah.
So this is again from the same website article. So Coinbase highlights how nearly 1 in 5 of Fortune 500 companies or executives say on-chain initiatives are a key part of their company's strategy moving forward, up to 47% year over year. So it is becoming a lot more rapid as far as the adoption and the conversations about adoption. It brings me back to 2021, where a lot of this was just speculative. It was becoming just trending because before 2021 or even 2020, a lot of people who knew about Bitcoin in general were niche crowds, maybe
adopters, very early adopters,
geeks and stuff.
They were they were very. It's just Minecraft when it was just a Java game, super beta. The early adopters there took it on. The early adopters of the internet when you didn't have Google search or anything. You just kind of found stuff based on random people, or even when Bitcoin, you couldn't buy it online. You have to go meet somebody in person, and they would give it to you. They're always very early adopters.
Yeah, so I don't know, quick side story here, but I'm sure, Leon, we've worked together, Geekdom, that's where we met. John Chadwell from Packapit, him and I went through an incubator and accelerator, or should I say, pre-accelerator at Geekdom. He was telling me how, before he started the product that is Pack-a-Pit, he actually worked at a restaurant, I believe, in New York. And
Owned it.
okay, so my bad. He actually owned a restaurant. He also worked at Apple, so he's a very smart guy. He was telling me how in that same restaurant that he owned, there was a guy who would go on a weekly or maybe daily basis. He would have lunch there, and then he would meet with random people. They would kind of like come in there and then just talk to him, sit down at a booth, and then leave. Well, they were actually making Bitcoin transfers, like transactions, and back when Bitcoin was like worth a couple of dollars too. So John had the opportunity to buy Bitcoin at like a couple of dollars, and when we talk, Bitcoin was like at 50,000 at the time. So it's gone up since over 100. So it's kind of crazy how the world circles.
There's so many stories of people like that. Like, oh, I didn't want to buy it. It was, I believe John told me that it was like $13 at the time, and he's like,
gosh.
oh, I don't, he's running a restaurant. He's like, I razor thin margins. I don't need to spend it on some, weird digital currency that he didn't quite understand. And
yeah, I think that's what it is.
It is a weird thing to think of, and I still have a hard time wrapping my head around this sometimes. Like, stable coins, I was like, what is it? Like, why do you need a stable coin? But in the view of it being like, oh, an upgrade to the old infrastructure that some banks still use FTP files to transfer money between each other. They put it in a file and they're like, oh, this is what it is. It's crazy to think stable coins could solve a majority of things. It's also Big Brother in many ways. Like, they're able to audit it, they're able to stop fraud, they're able to stop chargebacks. Like, we'll talk about that a little bit in even the credit card world. But
oh yeah,
the crypto stuff and Coinbase is going to be the center of all of it. It's it's just like when you think Apple, you think the modern cell phone and you think Steve Jobs. I think at some point 20, 30 years later, when this is just a common thing, we're going to think Coinbase and Brian Armstrong is going to be the person who shepherded all of this along.
Yeah, I think whenever you look at any interviews or press with Brian Armstrong, the CEO of Coinbase, he always goes back to referring to the Bitcoin white paper as part of what influenced him to start Coinbase, as well as to change his worldviews on the way the financial system works, which goes on par with him starting Coinbase. So, very smart guy, very, very interesting stuff. All of this, the way Bitcoin came up to be, and to see where we are now. But more into the story. So you can read this article as well. We'll leave it in the description again. 3 things that it covers that I think kind of highlight a lot of what was talked about here in the State of Crypto Summit. First, talked about stablecoins are facilitating faster money movement, updating outdated financial systems, which is kind of something that you mentioned earlier, as far as moving money. And then crypto helps address the top financial pain points facing SMBs. 80% of SMBs say crypto can help solve at least one of the pain points their business faces, up from 68% a year ago in 2024. You can read more on this, and then it also highlighted the Genius Act, which we already did earlier, where crypto is becoming the talking point in the Senate floor, and our representatives in the U.S. are actually putting in some work as far as creating some much needed clarity as far as where the regulations go. So interesting stuff. 2 big other things that came out of this State of Crypto Summit. First is the Shopify partnership with Coinbase. Also, Coinbase partnered with Stripe as well for just incorporating stablecoin payments. So if you have some USDC, maybe some Tether, some USDT on your Coinbase wallet, you're going to be able to use it now to buy goods and services on Shopify. So that's pretty huge. Oh, and with Stripe.
It's like the first mass adoption of stable coins. I think that a majority of people will see. Like, I believe like everybody in the world at some point touches a Shopify site within a month. Like if you buy something online, you're going to touch a Shopify site. Like you're now going to see stablecoin as an option to pay, and everyone's going to be conditioned as like, oh, hey, this is a payment method. And I think that's the first step to mass adoption.
Yeah, so I just did a query here, or I mean prompt on ChatGPT, and I asked it, how many stores online use Shopify today? And as of Q2 2025, built with based on analysis estimate around 2.58 million live Shopify stores currently operating, representing a 6% year over year increase. So I'm not sure what it looked like every other year, but it seems to be by a 6% increase.
It's huge. I think they take up like 3-4% of the internet, and
yeah, I was
like,
looking for a number
that's
like
huge
that.
portion of the internet.
Shit, I mean, we're like what, almost, if not 8 billion people worldwide. So
Yeah, I don't know how many people are online, but I know like WordPress powers about 50% of all websites. Like 3-4% is huge.
Yeah, so Shopify, everyone is going to be able to pay with USDC. So I think this is a step in the right direction as far as allowing normal normies, for lack of a better word, to at least be aware of what crypto is if they already aren't. So that's pretty much it as far as Shopify goes with Coinbase. One more thing I want to show here before I go into the last point for Coinbase Crypto Summit is there's this video that I'll share as well. We will show here in the link below, as a link below in the description. I feel like I've been talking a lot, and sometimes my brain just stops functioning as far as talking. But it's actually the entire live video that covers the State of Crypto Summit. And there's a couple of segments here where, as of this recording here, we're seeing the founder and CEO of Circle, the provider of USDC. I forgot what his name is, but he's right here, and he's right next with Brian Armstrong, and a lot of what they're talking about is kind of reminiscing when they started, when the founder of Circle started Circle in 2013, and they were having a hard time getting any bank to provide them a bank loan for their business because they weren't sure if crypto was even a legal thing. This was around 2013 when I guess Ross Ulbricht was trending with Bitcoin and Silk Road. He did get convicted back in 2015, so 2013 is when he got arrested. So maybe the timeline isn't so different because of that. But they were talking about how much has Bitcoin and just the overall sentiment around it is, and it's improved so much. And he is very proud of what he's done as far as with Circle. But Brian Armstrong was also talking in this small clip here in the interview, how he started Coinbase, how he was very inspired by the Bitcoin white paper. So yeah, it's really cool to see, and it kind of gives us a vision of the past, but also of what could be in the future. So, I mean, I like this video. We'll leave it here in the link as well. It's the entire video as well for the summit. But I want to save the best for last here, and that's with credit card adoption, or credit cards adopting Bitcoin to some capacity. So I think for me, what inspired it before the crypto summit was this video from Daniel Sparks. We'll leave a link to the description as well. So he talked about how credit cards with, particularly Amex and some other more established cards have been pulling back on their rewards, on their cashback and benefits, because everyone already has credit cards and people are not paying back their balances. So the carriers of the credit cards are actually the ones kind of suffering. They do actually make a lot of their money with just a balance statement, just in interest as well. But generally, we live in not financial good times, for lack of a better word. I don't know if that's how we describe it, but
it's a crunch. It's a credit crunch, but also
yeah.
So like a small thing on that, like every credit card company is kind of different on how they make their money. So for example, American Express is all about transaction volume. They get most of their money from just you swiping the card. It's a charge card, so you don't always like carry a balance. Some people do have credit options on American Express, but like, most people don't understand, like, there is no spending limit on an American Express card. Like, you could go, and if you make enough money and you spend enough generally on an Amex, you could buy a whole car on it. Like,
Oh yeah.
just straight up. But like, American figures for credit cards too. It's like, I think the average American owes like $7,000 in debt to credit cards, and I believe that there's somewhere in the trillions. Like, we have the most credit card debt right now than ever, and yeah, more and more, like, people are getting smart to like the credit card point systems. Like, there is an argument that, if you use a credit card in grocery stores, who pays for all of those fees? Because a credit card is a higher fee than a debit card. It's somebody who's financially struggling. So there is some like equality conversations around that, and it is going to decimate the fees, which is going to decimate the rewards market. If these bills pass in Congress, and like, there's a lot of conversation around it. The points guy has some really great info. This video is a good example of what's happening. But credit cards are changing, and they're changing very quickly, because not only do Americans carry way too much debt, just like the American government carries way too much debt, but most people don't know how to use a credit card. They kind of use it as free money. They overspend. They do that. Like, it's an interesting model, and they all offer points, and points are being devalued more and more. So it's a shifting game, very fast and very hard shifting game.
Yeah, I agree. So I think Gemini credit card came out in 2021, and it was the first one to. Well, actually, I think they relaunched their credit card as far as the rewards program.
Wasn't it Crypto.com that had some of the first credit cards?
Yes, it did, but that one was not as popular, because depending on how much crypto you held in the wallet or in their app, you would get more rewards. So if you held more of their token called Cronus or CRO,
Yeah.
you would get more rewards and more cash back and such. And then Gemini right now actually enables Bitcoin instead of points with rewards. But you made a very interesting point earlier, saying that the people of the U.S. at least carry a large debt in credit cards alone, like individuals being upwards at 7,000. So as of March 31st of this year, it has been estimated that there's a total outstanding credit card balance of 1.182 trillion, and it's down about 2.4% from 1.211 trillion at the end of quarter 4 2024. So
Yeah, that's a huge risk for these credit card companies too. Like,
it is.
if the economy tanks further than what it is right now, like, they have a really high probability that unsecured debt is going to go in default first. Like, and an unsecured debt is something that you can't go repossess something. So if you have a car, it's secured by the car. If you have a home, it's secured by the home. Credit card is a risky, and that's why, a lot of people pay 22, 25, 30% for credit cards, because like, the credit cards company's recourse is to sue you in court, maybe get a judgment, but what's stopping you? So there's also a ton of fraud in credit cards. There's also a ton of like chargeback, merchant problems. The fees are high. Amex charges 3.4%. Like, credit cards are largely broken.
Visa, which is one of the major credit card providers, they are adopting stablecoins. So there's this article that we will leave in the description as well, where it talks about empowering the future of payments with stablecoins. So they kind of highlight here how they're going to use stablecoins on their credit cards now. So that's kind of big. Visa is the number 2 largest provider for credit cards worldwide, if not the number 1. And I think right after that would be MasterCard.
Yeah.
So
and when you look at it, credit cards, again, the financial system that we have today is largely built in the 50s, post World War II.
yeah,
So there's delays in settlements. You swipe a card today, 2 to 5 days later, the payment actually clears. There's high interchange and processing fees. Amex charges 3.4. I believe these others charge about 2.8. To the merchant, 2.9 plus something. There's frequent fraud, and there's frequent chargebacks. So that's a big thing. And then you've got choke points from these banks that are processing everything. So if they can update the rails and make stablecoins the thing, it's instant settlement, global by default. You don't have foreign transaction fees.
Yeah.
To the U.S. government's like joy, I'm sure. U.S. dollars, USDC backed dollars are going to be the global payment rail, essentially all over the world. And then you've got transparent and audible, little big brother here, but you're now able to say, was that person, was that transaction fraud? Okay, let's flag all of these, go look at it, like what happened. It should cut down on fraud. And then, and this is the really interesting part for me that I just don't really, understand quite yet, is like, it's going to be near zero fees. So if there's near zero fees, how do you offer, 4% back, on a card still? You're going to have a hard time, even if it's Bitcoin. Like, what, how do? Do you charge monthly fees for the credit card? Do you have a yearly fee? Do you do all of that? Like, what is it?
Yeah, it's a really good point because before talking to you about it this week, or before us getting here on the segment this week, I actually talked to you about like credit cards and stuff, and you were telling me how, if they're cutting back on their transaction fees, then their rewards are also going to come down or scale down as well, because it's something that the credit card providers are going to have to leverage, which is part of the reason why they charge a lot in their transaction fees, which I didn't even think about. But for Bitcoin, it might be different. Gemini is more of a exchange than it is a bank or a financial system. However, if you're an exchange where you can buy Bitcoin directly through them, that does subject you to complying with the SEC, FinCEN, and other, providers, other lawmakers here in the U.S. or agencies. So them providing Bitcoin, I don't think it's FDIC insured yet, but in the near future, we might see some form of FDIC insurance, which I think could help consumers a lot. But I'm not sure if that could also help the business as well, as far as, anything were to happen. But
well,
we could.
I guess that's just for the money that they're housing, like if they fail, they fail. But for a credit card, I guess it doesn't matter,
Yeah.
They fail, they fell.
Yeah, I mean,
There's no FDIC insurance for brokerage accounts. There's no FDIC insurance for credit card companies per se. They carry their own insurance.
Yeah, I agree. So we'll see what happens. Gemini Bitcoin card was actually really big in Bitcoin 2025. They used two Tesla Cybertrucks to make this promotion. So it was actually blowing up on Twitter. This is not an endorsement to them. They're just pretty big. Though. Incredible marketing for sure. In fact, I think because they launched this model in Bitcoin 2025, it actually helped them a lot with traffic, with signups and everything. So they're doing something right here. So the last point that we'll cover here for Coinbase Crypto Summit is Coinbase is actually releasing its own credit card, and it's called the Coinbase One Card, which actually I think it's a very beautiful card because it's black. I think they're inspired by Amex, Centaurian Black. I think that's the black one from Amex. Users who sign up earn 4% on Bitcoin on every purchase. But the card itself is like stainless steel, which I think most use stainless metal or just metal cards. I think Apple uses titanium, which is a really beautiful card. So if you look at it, it's got all this text, but it's actually the Genesis block from Bitcoin, like the Genesis block being the first ever transaction or block in the ledger that is the blockchain, the output of it. And I think it's a very memorable, Easter egg, if you will, like little reference here they made in behalf of Bitcoin. So I don't know if you've seen this yet, Leon, but so maybe you may not see it here on my screen, but on the right hand side of the card, you see the name Coinbase, and below it, this is actually a remark that was made inside of the Genesis block itself by Bitcoin. It says, and this was backwards in the Genesis block, but it's been flipped here for convenience. It says, the Times, January 3rd, 2009, Chancellor on brink of second bailout for banks. So it referenced a lot it references a lot to the bank bailout that happened in 2008 recession, because this is the whole reason why Bitcoin existed, because the recession back in 2008, it disrupted the markets and Bitcoin was born.
Yeah,
and I think
it's kind of the the irony of it too is the Bitcoin is ushering in a new financial system. It's not an alternate system that everybody thought it would be, like free in there. This is still a system that is going to be highly regulated and brought into the normal financial system. Like the new thing is Bitcoin and underlying crypto is going to become the new system. So very fascinating to see, the roots of where it came from, of disrupting a financial system to becoming and replacing it in a somewhat undisruptive method. Like no big companies are failing, no changes. Like it's just companies are adopting it versus, like before you had Blockbuster go out of business to, bring Netflix, to become popular. I don't think you're going to really see, Visa go out of business because crypto came in. They're going to adopt it as it's an infrastructure. Really, crypto is becoming the infrastructure of our financial system worldwide.
I think that's what it was originally meant to be. Bitcoin itself is more of a reserve currency, which Brian Armstrong highlighted in the State of Crypto, and I couldn't agree more. But the underlying tech being the blockchain, that is a visual, transparent ledger. You can see all the transactions. You can move money faster than you can with the Swift network. So it really is underlying infrastructure.
Yeah, my only gripe with this card is it's an American Express card, but it's like not an American Express Express card where you get all the benefits and all of that from American Express. You do get the fraud protection. Well, I guess you do get the fraud protection. You do get discounts at the partners. I don't know if you get travel protections or the things, but you will get accepted. But if you go out of the country, out of the United States, American Express is a little less accepted unless you're in a big tourist hub. And then oftentimes when you're in a tourist hub, they'll have a Visa, MasterCard POS, and then you'll have a Amex POS, and you just got to tell them what you're using. But it's credit cards and financial flexing is always a thing. So this card is symbolic to everybody. It positions it as a Web3 native user. It's part of Coinbase's broader ecosystem with its base DeFi tools and NFTs and everything. But the only thing is you're not spending crypto per se. They're not really disrupting anything there right now. You're just earning crypto. You're not using it to pay for it. And I believe you collect it in USDC. Maybe I think you can collect your rewards in ETH too, or Bitcoin, but I think it's all USDC, right?
As far as rewards, I'm not entirely sure. You can look at all the benefits here, but you do need to be a subscribed member to, use this card, and to think of it like an annual fee, which it's pretty common.
4.5 boosted USDC rewards, and then you get more staking rewards, and then you get transaction credits. That's actually not bad. Overall, the wallet's the credit card's pretty cool. I would love to get it. I probably won't. I don't pay for Coinbase One, so it's a good reward for something that's becoming. Coinbase is becoming your new age bank. Wells Fargo does this where you pay Wells Fargo a yearly fee and all this. They're just doing this as hey, you have our membership, now you get a card, now you can bank with them more and more because stablecoins are going to become the payment rails. And if you can just interchange everywhere stablecoins are accepted, you can accept US dollars. It's soon going to be credit, debit, or stablecoin. That's going to be the question that everyone asks. What's your payment method? Debit, credit, or stablecoin? Or cash?
Oh, yeah.
That's going to be the new ask at every store that you go to.
I agree. That's gonna be kind of exciting. One day you're like, oh, I need enough USDC, so I'm gonna sell my fart coin to buy groceries or something.
Yeah,
it's gonna be funny.
I want a fart coin rewards credit card. Every time I swipe, it makes a fart noise, and I get some fart coin.
That'd be funny. But yeah, interesting times we live in, and in light of the 2008 recession, I think it was a recession. I keep saying recession, but
It's called the Great Recession.
okay, yeah.
It
So
was
2008.
like recessions have an economic like there is negative growth in the economy. There was negative growth in the economy. Granted,
Yeah.
the Biden administration changed the terms of that, and I'm sure the Trump administration will change the definitions of what is a recession. But 2008 was the biggest recession that I believe the United States had outside of like wars and the Great Depression.
That's a good point. Yeah. So in light of the recession, we had Bitcoin, and now we have credit cards with Bitcoin rewards or USDC rewards, and maybe in the future we'll have Fartcoin rewards. So we'll see what happens. So yeah, this has pretty much been everything we've had to cover for Social Ledger Report today for this week. So stay in touch for next week. Again, like this video if you liked it, dislike it if you dislike it, subscribe if you want to stay up to date, and share it to your friends.